Time for Futures in Focus. U.S. crude inventory data in the last 20 minutes showing a surplus where the markets had expected a withdrawal. But gasoline inventories dropped more than expected and soybeans dropping as the U.S. and China move closer to additional tariffs. Let's bring in Bob Iaccino of Path Trading Partners at the CME. Talk to us about the commodity space right now, and oil in particular. It's coming off of its lows.
It's coming off its lows off of that gasoline build, but the gasoline build really is adding to the 3% that we're currently above the 5-year average, and that's as we come toward essentially the turning point of the summer driving season. The peak is officially Memorial Day, and the seasonality pushes crude oil lower sometime in mid to late August, possibly even stretching it out to early September, but that's usually when we've had higher fuel prices for quite a while, and you see less flying and more driving because of jet fuel increases. That's not the case right now, so we're likely to see that taper off a little bit earlier, and that's going to add to the gasoline inventory and kind of add to the crude inventories by default.
So oil go lower?
Well, we should go lower in the short term, yes. The issue overall is the medium term is much more difficult to talk about given the circumstances we have with sort of the pipeline capacity. Pipeline capacities from the Permian are at 100%. Refinery utilization is starting to fall mainly because they can't get the crude there. We've seen a drop off from historically high levels, 97.5 about 5 or 6 weeks ago on that. Refinery utilization is in the top 92nd percentile of utilization. That's considered by most people in physical oil to be full capacity for refineries, and that's dropped off mainly because of the pipeline capacity issues. Now, there's talk of pipeline sections being widened. You can't increase the speed that crude oil travels through the pipes, or you could actually heat the crude oil up. So that 11 miles an hour is not going to change. So we need new capacity to get that out, and the production increases in the U.S. come 75% from the Permian, which is the main place we're seeing that capacity problem.
Intricate stuff, Bob. Very quickly, of course, all of today has been dictated by trade tensions and ratcheting up again. What's been the biggest thing you've been watching react to this?
Well, it's been crude oil mostly just because of the demand side globally, but also soybeans have been very active. We've had a 3-week increase in soybean futures prices, but we're kind of stalling out now, and that's probably the right thing given how the rhetoric has ratcheted up a little bit today. As much as you might get pressure from quote-unquote Trump states, that's not necessarily going to play out in the short term. So we're looking at soybean prices probably falling in the near term.